since closing in on $49,500, following the news that the Fed will accelerate the interest rate to triple on December 16. Bitcoin has failed to make any significant follow-up moves, quickly falling to the $46,000 price area, and constantly stuck in this range. Combined with legal events that have occurred continuously in the past week, the psychological weight of retail investors has become even heavier. From the event that the UK banned Coinbase ads and a series of other large companies, the Central Bank of India, the Central Bank of Russia, the Bank of England, all wanted the government to completely ban cryptocurrencies. Nations began to educate people about the dangers of crypto. Since then, more selling pressure has been exerted compared to the absorption of buyers in the market, despite the situation of Bitcoin reserves on the exchange bottoming out, even though 90% of the supply has been mined. Since then, the price of Bitcoin has been severely disrupted. However, looking at the action of Bitcoin miners brings a positive perspective. The majority of Bitcoin mining pools are not ready to sell at the current prices. Specifically, the Bitcoin outflow has hit another low after 3 months. Other data shows that the unused Bitcoin supply is about to reach an all-time high. In other words, existing miners are in no hurry to spend their mining rewards to cover costs. Especially when the Bitcoin mining industry has completely recovered from the Chinese ban. So, will Bitcoin find its way to recover after the major crash? It is hard to tell. Looking at the fear and greed chart in the crypto market, the investor sentiment is as weak as ever. Based on the downtrend of the chart, the index has stayed in the extreme fear zone for 2 weeks, having failed to break the 30 levels throughout December. Bitcoin below $50,000 is seen as a bargain for high-volume investors, but an industry metric tells the opposite story. Grayscale hedge fund GBTC stock is currently trading with the premium index number of -20%. Simply put, whenever the GBTC Premium Index trades positive, it signals that institutional interest in Bitcoin exposure is growing. And when GBTC Premium is negative, also known as GBTC Discount, institutional demand for Bitcoin investment products suffers. Looking at the chart, we can clearly see that GBTC Premium is at a record negative level, showing that institutional capital is retreating as it no longer finds Bitcoin as an attractive investment. Remember, institutional funds have always been the main underpinnings of Bitcoin's bull run. In a recent exchange on Twitter with superstar rapper Cardi B, former Twitter CEO Jack Dorsey said that Bitcoin will replace the US dollar, once again showing his unwavering support for the crypto king. The interaction between the Grammy-winning rapper and the tech billionaire about crypto usurping the dollar has sparked a lot of reactions on Twitter.